Nigeria's gross domestic product is projected to grow in 2025, driven by agriculture, oil and gas, including financial services. Inflation is expected to also average between 25 and 30%, with easing likely in the second half of the year due to exchange rate stability, food supply improvements, and NBSC's rebasing exercise. Now, the Naira is forecast to strengthen, supported by EFEMS platform, increased FX inflows, and rising reserves. Now, CBN is likely to maintain tight policy in the first half of the year, with possible easing later. And agriculture remains vital, contributing over 20% to GDP, while oil attracts about $5 billion in upstream investment. Financial services growth is expected from digital expansion and sector recapitalization. But then, to make sense of all this, I'm being joined by Dr. Joshua Bamfo, his partner and the head transfer pricing services practices at Andersen in Nigeria. Dr. Bamfo, thank you so much for coming around.
Thanks for having me.
Now, before we talk about 2025, let's first get your thoughts about 2024's economic performance.
So 2024 was one of clear macroeconomic instability, but also an exhibition of resilience when it comes to the business sector. We have three key markets that are extremely important for the performance of an economy. There's a market for goods and services. However, what we saw in that market was that prices for those goods and services continuously skyrocketed, as depicted in the inflation rate data. So by the end of the year, the inflation rate for that particular market was around 34.8. That is extremely high. Secondly, there's also the market for foreign exchange, forex market. The price of forex is measured by the exchange rate. And we saw a lot of volatility in that particular market, in part due to the reforms that the current Tinubu administration implemented. By moving away from a fixed exchange rate regime to a more floating or flexible exchange rate regime in order to bridge the gap between the exchange rate that pertains when it comes to the official rate versus what pertains in the power market. We're able to achieve that to some extent, but it came at a huge cost when you look at the rate of depreciation of the Naira against the dollar. So by the end of the year, we were looking at Naira trading around 1,500 to a dollar. For us, when the Tinubu administration took over in May 2023, even in the power market, the Naira was trading around 500, 600 to a dollar. So that rapid depreciation had an adverse impact on businesses. That also fed into the inflation that was high. Then there's the last bit, which is the market for funds. Because the Central Bank of Nigeria had to curb the high inflation rate, they had to implement tight monetary policy, which meant that the benchmark interest rate, which is the monetary policy rate, had to be consistently increased over time. Beginning of January 2024, I think the monetary policy rate was around 18.75. By the end of the year, December 2024, we were around 27.5. That is extremely high. What that means is that borrowing for businesses had to be at a very high rate. Prime lending rates were pretty much above 30%, so which also had an adverse impact on businesses. So clearly, 2024 saw an economy that was highly unstable, that needed to be stabilized. Good news is a number of businesses were able to demonstrate resilience and were able to actually thrive in some cases, and in other cases survive the turbulent period. The belief is that going to 2025, some of the reforms that were implemented in 2023 that had short-term adverse impact would over time start yielding positive impact.
Yeah,
so
Professor
for example,
Bamfo,
the removal of this.
I was going to come to that. I was going to come to the issue around the economic policies of this administration. I mean, when you do your evaluation and you aggregate how the market forces are reacting to these policies, can you categorically help us understand if the signs are showing that these economic reforms are managing those challenges well?
So let me start with the removal of the fuel subsidy. for example, we all knew that there was significant distortion in that particular market, and there was some potential abuse of that particular policy. So theoretically, it makes sense for them to move away from the significant subsidization of fuel prices at the pumps, especially when there was some significant abuse. So what we were hoping to see was that those savings would then move to sectors that would then impact the economy positively. In the short term, that subsidy removal had an adverse impact of making the inflation worsen. So what happened was that imported fuel became more expensive, transportation costs became more expensive, food inflation went high, and added to the upward pressure on average goods and services prices, right? So clearly it had its unintended adverse impact. But if you look at the 2025 budget and the fact that there's some significant allocation of funds for capital projects, and one can argue that part of it might be the savings that they got from the removal of the fuel subsidy, then it can be argued that if those funds are actually used for what they are intended to do, that is make significant investment in capital projects in order to reduce the infrastructure deficit, then an argument can be made that from 2025 going forward, we can start observing some of the benefits of that particular policy, even though it has short-term unintended adverse impact on the economy in terms of high inflation rate. You can also make a similar argument when it comes to the moving away from a fixed exchange rate regime to a flexible or floating exchange rate regime. What we've been able to achieve is the fact that on one side, now we don't have the situation of round tripping, where people who had relationship with key people at the CBN were able to get access to forex at a lower exchange rate, and instead of investing in the real economy, will then round trip to the power market and sell it at a higher rate, and then make some significant returns out of it, which we call rent-seeking behavior. Today, you don't have much of a gap between the power market and the official rate. However, the challenge we see is that initially, the speculators were able to drive prices up and still be able to make money out of it. But currently, we have seen some stability in the exchange rate market, in the sense that there's been more transparency, there's been more injection of forex, and therefore we see some stabilization. So if it can continue that way, then once again, a policy that had short-term unintended consequences can actually turn out to be beneficial, because you have a more transparent foreign exchange market. It is stable, and we can see trading real term, and we can take out significant portion of the speculative demand, then really that will augur well for the economy. So in a nutshell, we are yet to see those reforms gain full traction, but there's an expectation that we will see those traction sooner rather than later.
Okay, so let's dwell more now on your expectations and look at the pre-existing realities. Now, for 2025, Nigeria's outlook is believed by a couple of economists to still be fraught with risks. I mean, I'm talking about global oil price volatility, of course, that external shock, but then it's still part of it. We're talking about debt servicing, insecurity, oil theft, amongst other challenges. So with these persisting issues, how well will the projected growth come into materialization? How would it happen?
So even if you look at the projections, and depending on which of the sources we are looking at, it tells you that we are all not 100% confident as to how well the economy will perform in 2025. So, for example, if you look at CBN's projection, they are projecting the GDP to grow around 4.17%. But if you look at the World Bank, on the other hand, they are projecting the GDP growth to be around 3.5%. Even if you look at IMF is projecting it to grow at 3.2%. Whereas when you look at the government is saying we are going to grow around 4.6% with the hope of getting to 7% within the next 2 or 3 more years. So there's significant variation in terms of those projections. And there are a number of factors for that. So if you want to be more optimistic, then you're going to put more weight on your belief that, one, the reforms that we just talked about are going to gain traction as quickly as possible. And I think that is the posture or position that the CBN has taken, as well as the government, that look, we've had some significant reforms. Initially were tough, but we're going to see results. Secondly, they believe that oil production can be ramped up significantly in 2025. There's a target of almost 2 million barrels per day for 2025. Now, if you want to take that position, once again, a very optimistic position, then your projection or your forecast will also be optimistic. Thirdly, if you believe that the Central Bank of Nigeria will be successful in reining in inflation quickly in 2025 so that they can start reducing interest rates, make cost of borrowing cheaper so that businesses can then borrow to invest in terms of expansion and new businesses in order to create more jobs and increase GDP growth rate, then you will be for those who are more optimistic. But as you rightly said, there are a number of factors that are even outside our control. There are potential external shocks that are potentially going to impact Nigeria for 2025. I don't believe that most of those projections factored in the potential trade war that the Trump administration has set in motion. If you factor that in, and if you look at the posturing of China and the US, the probability that the two elephants are going to continue to go at each other, and then the grass, which is the emerging economies and developing countries, are the ones who are going to suffer most. If you take that particular position, then I think you have to err on the side of caution and believe that the World Bank or the IMF projection is more realistic. Because what is going to happen is that, yes, Nigeria is going to negotiate with the US government about the 14% tariff rate that they've slapped on Nigeria, for example, which is going to hurt businesses that we want to diversify away from the oil and gas export. That is going to hurt the economy one way or the other. The worst part is the bill that the Trump administration is trying to pass. Remember, it's already passed through the House, and it's now up for the Senate to debate it. In that bill, is the U.S. intending to explore and produce more oil, domestically. If they do that, then they are not going to demand as much crude oil from Nigeria as they used to. That would impact, oil prices. And I'm not sure that most countries, especially exporting countries like Nigeria, factor in that possibility. So really, based on some of the development in the first quarter of 2025, some of these projections, I think, could be revised downwards if you think that some of these exogenous external shocks are going to impact Nigeria significantly. Now, the most current result that we saw for inflation is also alarming, because our expectation was after the rebasing that dropped the inflation rate from 34.8 to, was it 24.5? That is January, and there was a further drop to 23.2 in February. Our hope was that there was going to be a continuous downward trend. But just yesterday, we heard that inflation has ticked back up, to about 24.2. What that means is that the Central Bank of Nigeria will be hard-pressed to either hold the monetary policy rate at 27.5, or in the worst case, if the upward trend continues, they might have to continue to increase monetary policy rate. And that will hurt the economy actually growing in terms of GDP growth rate. So there are current developments that is shedding some doubt in terms of the optimistic projections that Central Bank of Nigeria as well as the government had prior to the beginning of the year.
So it would actually appear that, it's more or less like fighting this battle from multiple fronts, from the monetary angle, from the fiscal angle, from the realistic angle. And now, Nigeria's projected growth, according to reports, is hinged on agriculture, oil and gas, including financial services. Do you think that these sectors could create some sort of insulation for Nigeria's economy? Peradventure, the global markets, including the tariffs and the decisions that might go on in the international scene, go south and it affects Nigeria. Maybe that could create a bit of buffer, mitigate the situation a bit for us. I'd like to take your thoughts.
Yeah, I think, for example, if you take the agriculture sector as an example, and the fact that we want to move away from exporting raw materials to exporting processed, and goods, where we are sourcing the raw materials locally. For me, that is an excellent policy. What it does is it helps with import substitution so that we are not overly dependent on, importation of some of the products that we can actually produce locally, which is actually where the world is trending if Trump gets his way. And so that is extremely important. However, the problem will be in terms of export. We might not be able to access a major market like the US market. but it doesn't mean that we cannot be strategic in looking for other markets in order to access. I think it's about time we also look inward in terms of the Africa Continental Free Trade Agreement, AFCA, and what it was meant for. If there's been a time that has become urgent and important, this is the time. We really need to look inward as a continent and try to trade amongst ourselves. That's what the European Union is doing. That is what China is trying to do with meetings between their leader and Southeastern Asian countries. So yes, agriculture being a major source of growth, and if we are strategic, that can take some insulation from some of the
Dr. Bamfo, I think we just lost connection with Dr. Joshua Bamfo right there. Okay, so hopefully it will be back to round upon his summation this morning, but then we've been looking at some of the critical issues affecting Nigeria's GDP, despite the fact that there's a potential for growth, but then there are domestic and external shocks that might prove a stumbling block for this. So, Dr. Bamfo, thank you so much for staying with us. So I'd like you to conclude on your summation and tie it around what can be done, then what we need to look forward to, probably looking at the first half of this year, and of course, by the time we conclude the remaining half of 2025. All right, let's quickly go on a very short break. When we return, we'll conclude on this and continue with other conversations. Stay with us. Even as we conclude on the outlook of Nigeria's economy in 2025, yes, we've been talking to Dr. Joshua Bamfo, and he's been sharing his thoughts with us. Now, Dr. Bamfo, even as we conclude on this quickly, so what contributions do you think that the oil, agriculture, and the financial services can do for the Nigerian economy? And what do you think the eventual outcome would be when we are tailing towards the end of this year?
So I think those three sectors are going to be critical for our success this year. For the agri sector, I think it's very important that we continue to invest in producing products locally for local consumption as well as export. That import substitution would be very helpful. It helps put less pressure on our forex, and it's also going to create job opportunities. Challenge obviously will be on the export side. If Trump should carry out his trade war, we might lose access to some markets, but we need to look at elsewhere to get market access. And one way of doing that is to look inwardly in Africa, in terms of Africa Continental Free Trade Area, where we can actually trade amongst ourselves. So I think the agriculture sector could actually be robust enough to survive any trade wars. On the oil sector, I think we can do a good job in terms of ramping up our oil production. That 2 million barrels per day is a stretch, but still achievable. There's a lot of what government has to do. But what we might not have control over might be the oil price. Should US get its way, get Trump's bill passed, and they ramp up significant production locally in the US. So that's what we need to be mindful of, but we can control our oil production as much as possible. And finally, on the financial service sector, I think with the fintech growing, if we can make sure that the informal sector is more formalized in terms of financial inclusion, that is going to be very, very critical for our success.
All right, thank you so much, Dr. Joshua Bamfo, partner and head transfer pricing services practice at Andersen in Nigeria. It was nice talking to you.
Thanks for having me.